Given today's brutal decline, what stocks are safe for you to think about circling back to? How about the financials? We know the banks do better when interest rates are on the rise. They make more money off the difference between what they pay you for deposits and what they charge you for loans, which means you can feel confident about buying these stocks into weakness, so long as you do it gradually. That's why tonight I want to introduce you to some bank that I've not talked about, Valley National, VLY. It's a regional bank with 230 branches in New York and New Jersey, with some terrific new Florida exposure that you may not know about. Company reported a solid quarter last week, delivering in-line earnings, higher than expected revenues. So could this regional be worth owning now that everything's pulling back? Let's take a closer look with Ira Robbins. He's the new CEO of Valley National Bancorp. Learn more about the new direction the company's taking and what it means for shareholders. Mr. Robbins, welcome to Mad Money. Good to see you, sir. Have a seat. Thank you.
Thank you.
All right, so this is not the Valley National that many of us know, particularly those of us who are in New Jersey. The sign's the same, but the strategy's different, so why don't you tell us?
Signs are the same for now. That's going to change.
Oh, really? That's going to change too? Okay.
So in the last 18 months, we've turned over the entire management team at Valley National Bank. We're focused now on the growth of the organization, enhancing and improving the earnings profile of Valley National Bank, as well as changing the culture of Valley National Bank to be more appropriate with what's changing in the industry today. It's an exciting opportunity for us.
My knowledge of Valley National, it's kind of a sleepy bank, never hurt anybody. Sometimes that's an okay stop, but it never really gave us the growth. What is the growth strategy, and how do we be sure you're not taking on too much risk in a growth strategy?
That's the next point. Valley's been around for 91 years. It's never had a losing quarter in 91 years.
Pretty incredible.
To a certain investor base, that's great. But as we look to move Valley National Bank to a focus on a different investor base, the emphasis has to be on growth, has to be on improving the overall financial performance of the organization and delivering real shareholder returns to the shareholders.
Right, now we got a little bit sidetracked in the 2000s, particularly near the end of the decade, where we saw banks move to Florida. And they moved to Florida and get aggressive and get all excited and doing a lot of mortgages that turned out not to be good ones. Valley National's moving down. You got new acquisitions. Good. How do we know that Valley National's not going down the path of the banks that didn't do it right?
Well, let me start back with maybe why Valley National went down to Florida. Sure. And that's the reason, because we didn't want to do it the wrong way up here in New Jersey and New York marketplace. So there's a lot of mutual conversions that took place in the New York, New Jersey marketplace, and a lot of capital to this market. Typically what happens is you would have an increase in interest rate risk profile of these types of organizations, credit spreads that deteriorate as well. And for Valley, we said this isn't an environment that we really want to play in. So we went down to Florida and said, where can we provide an opportunity to grow in a marketplace that has a real need for a bank like Valley National Bank? If you look at the $20 to $70 billion banks, there isn't one today in that state of Florida. There really isn't a bank today that can provide the services that a Valley National Bank can offer. So when we go there, we try to obtain and apply the same credit model that we've had up here that's been successful for 91 years in New York and New Jersey, and apply it down in the Florida market.
At the same time, the deposit base is obviously better because your net interest margin is one of the best of the banks I follow. That has to be some of these decisions you're making.
The net interest margin has to go up for Valley National Bank, and we're going to do it through enhanced earnings, through growth, not through expanding the overall risk profile of the organization. For us to go down to Florida, the deposit betas are much less than what they are here in New York and New Jersey. And
it's very competitive here, right? There's just too many banks.
A lot of that goes back to the capital, Jim. Right. When the mutuals converted, capital went here, loan growth had to go here, deposits had to go here, and it just became real challenging to operate a bank in this environment.
Now, there are a couple of things going for the banks that we like. One, the Fed raising rates, and two, the tax reform seems to be good. What do rate increases mean for your bank, and what does tax reform mean?
I think the rate increases for us, Valley doesn't take a position when it comes to interest rate risk. We try not to be too asset sensitive and too liability sensitive. The same thing with our credit profile. We want to perform in any different economic, in any different interest rate environment. So we think the asset sensitivity that we talked about on the earnings call will go up a little bit, a few basis points based on the rate increases. It's going to be a positive for us. But the real growth story at Valley is going to be the enhanced loan growth, the improved efficiency within the organization, and the changing culture at Valley. And that's what's going to really drive the earnings for us.
As a New Jersey resident, I'm horrified by what's changed in the tax code. Now, look, I've done well in this country. I'm happy to pay. But many people who live in the New Jersey area are kind of really betwixt and between. Many people want to move to Florida.
Yeah.
Are you actually seeing that kind of migration?
Yeah, I think it's great for us. There's already name recognition, as you mentioned, down in Florida, just because people have migrated from New York, New Jersey market down to Florida. So we already have that name recognition there. Now we have the growth that comes here. And I share your concern about what's happening in New Jersey. How business friendly is this state going to end up being, and what are the ancillary impact when it comes to economic growth?
What do you think? I mean, new governor, but At the same time, the tax base is not great here.
Tax base is of a concern.
Right.
Some of the policies that are being suggested right now, how business friendly is that, and what happens as we ripple through the economy as a result of that? I think for us, having 30% of our franchise in Florida creates an opportunity for us to outperform a lot of our Northeast peers.
Will you be looking at the bank being one day, say, 50% in the South?
Yeah, I think we are in the perfect metro markets in Florida today. We have a great opportunity to have organic growth in that market, and a large percentage of our growth is going to be proportionally based down in that Florida space. So it is going to go to a higher percentage.
Well, I'm glad you have a regional other than PNC Financial that I can count on. PNC being one of the biggest banks in the world. There are almost no regionals left.
That's it.
And none in this area that I find are investable. I think Valley National is. Thank you for coming on the show.
I appreciate it. Thank you.
All right. That's Ira Robbins, the president and CEO of Valley National Bancorp. The bank's woken up, but not in a dangerous way, in a nice growth trajectory way. Stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.